Hello and welcome to MF Corner. I'm Sonal Bhutra in the Mumbai studio. And today on the show, we are going to throw spotlight on ESG funds. This is a category which has been in focus but hasn't picked up pace so much. This particular category globally saw inflows of $900 million in Q1 of calendar year 2024, which compares with the outflows of $88 million in terms of flows in the quarter gone by, that is Q4 of calendar year 2023. If we talk about split as well, European funds, the ESG funds that is, they saw inflows of $11 billion, which was doubling of these inflows on a quarter-on-quarter basis. But US ESG funds, which is a big contributor to the overall AUM as well, saw worst ever quarter with $8.8 billion in terms of outflows. If we talk about global ESG fund assets, they rose by 1.8% on a sequential basis to just under $3 trillion at the end of March 2024, and only 97 new funds were launched in the ESG category globally in Q1 of calendar year 2024. If we talk about the geographical breakup, let's talk about that because that table will come up for you on the screen. Europe is the highest at around $10.9 billion. US has seen an outflow at $8.8 billion. Asia ex-Japan is inflows of around $0.2 billion. We have Japan, which has seen outflows of $1.7 billion, and Canada as well at $0.2 billion. So every geography has seen a different kind of input and output when it comes to ESG flows. But what's happening in India? Let's try and understand whether ESG is a category which investors can look at. It is a thematic category, so whether it's good for a first-time investor or somebody who has an aggressive portfolio. Let's welcome the guests on the show today. Gaurav Gupta, Director at G-Cube Investments, and Harsha Upadhyaya, Chief Investment Officer Equity at Kotak Mutual Fund, is joining us now. Gentlemen, thank you so much for joining us today and discussing something which is not really so traditional in terms of investing and has its own niche. Harsha, let me come to you first up. Has there actually been big flows in the ESG category in India? What explains the flows that we've been seeing here already?
See, most of the funds in ESG category came up sometime during 2020 in India. And post that, we have not really seen a big uptick in terms of either the launches or the flows. The overall category has about 10,000 crores of assets under management at this point of time. And not much flows in recent times, I would say. And the reason being, clearly the investors have found other avenues where the returns have been superior in the recent times. And that's what has led more money moving into, let's say, for example, mid and small cap categories, which have seen significant flows.
Okay, so there was a lot of chatter around it, but it did die out soon as well. Gaurav, let me come to you. The overall AUM is what Harsha spoke about. What does it look like individually? And when did it pick up space? How many do we have in the Indian ecosystem?
Yeah, good afternoon. There are currently 9 ESG funds, and like Harsha had said, they are managing about close to 11,000 crores. But if we look at SBI ESG fund, that is having a AUM of 5,500 crores. And this was actually earlier a large cap fund called Magnum Equity Fund. Due to the scheme categorization that happened in 2018, this fund was converted to the ESG category. And most of the 5,000 odd crores of assets are the old Magnum Equity assets that are going on. So if we, compare the average AUM of the overall all the funds, they would be only close to about 700 crores.
Oh, okay, all right. Yes, go ahead. You were making some point.
Yeah, so each of the funds on the average would be between 200 to 700 crores. Some of them may be about 1,000 to 1,100 crores. Coming to the performance of the funds, they have been basically in line with the large cap category. You would say that they have slightly underperformed on the large cap space. So we see that a 3-year return average would be in the range of about 15%.
Okay, all right. We'll discuss that in greater detail as well with individual funds and their returns as well, Gaurav. Harsha, I want to understand the AMC perspective. As we pointed out, only 9 ESG funds in India. Are AMCs holding back when it comes to launching these funds? Is there less interest with the investors or with the AMCs?
Clearly, what has happened is in India, ESG is still at a nascent stage. It's unlike what we have seen in Europe or US. It's not really something which is well entrenched in terms of investing philosophy. That's point number one. Secondly, most of these funds came up during 2020, as I mentioned, post which there has been a considerable rally and a significant outperformance of mid and small caps over large caps. And given the guidelines that have been there on the ESG category in the recent times, it has become very difficult for ESG funds as a category to really build mid and small cap exposure. For example, even when BRSR reporting was not mandatory, the funds were asked to put at least 65% of the assets in BRSR published companies. So to that extent, most of the companies that had on a voluntary basis had published BRSR at that point of time were all large cap companies or slightly larger mid cap companies. So to that extent, the universe was restricted to a very, very small number. So that also affected the returns over the last 3 years when the entire market has really generated a lot of returns by investing into mid and small caps. This category somehow was constrained to invest into those names. The second being generally the ESG rating or the scores are going to be better for financials and IT companies by the nature of their business, whereas manufacturing companies or power generating companies, etc., are likely to have lower ESG ratings, and which means that portfolio is also likely to be tilted more towards some of the companies which have higher ESG rating, which are into financials and IT sectors. And in the last couple of years, these two sectors have underperformed most of the other manufacturing or power sector. So to that extent, all of these issues have led to kind of underperformance of this category vis-a-vis the overall market.
Okay, all right. Because, somewhere in the middle after COVID, there was an indication that maybe ESG funds could do well. The ESG theme could work out with a lot of these non-ESG stocks underperforming as well. Let me come to you, Gaurav. You spoke about how returns have been. Can you break it down for us? How does it compare with large caps in general? And which has been the best performing fund when it comes to ESG category?
Yeah, sure. With compared to a large cap comparison, the average, say, about 40 large caps have generated about a 34% 1-year return. Vis-a-vis, if we compare the average ESG funds, their return range in the last 1 year would be in the range of between 28 to going as high as 48%. That is, quant ESG fund is the highest with a 48%. If we are looking at the 3-year, the average returns would be in the range of about 13 to 15%. Only again, the quant one is again showing a CAGR return of close to 30%. If we compare the 3-year return of the large cap category, that would be in the range of about 18%. So we see there is underperformance in the ESG category. Okay. Coming to what recommendation, if we are looking, we look at the quant ESG fund has, even though the assets under management are about 240 crores, the 1-year return is showing about 48% and 3-year return is showing 30%, which is having a significant outperformance compared to the other ESG funds in the category. Quant, as we know, has a high portfolio churn ratio. So their churn ratio would be close to about 250 to 300% compared to maybe a 25-30% churn ratio, which the other mutual funds follow. So in that sense, they had also picked stocks like Geo Financials as a 10% weightage in the portfolio, which did exceedingly well, in the last 2 to 3 months. So, and I think they do a lot of profit booking by which they are, able to generate that sort of higher alpha.
Okay, I was actually going to ask you what explains that outperformance, because even since inception, Quant Mutual Fund has seen returns of 38% in their ESG category, but the churn is really high, and that's been their strategy as well. Harsha, let me ask you now, because a lot of investors, maybe institutional investors, would be more interested in ESG funds, right? They are largely thematic in nature. Does it cater to retail investors first up? And is it not for first-time investors at all? How do you go about giving or advising your clients for this?
Definitely, ESG funds fall under thematic category. So to that extent, one needs to know the nuances of the category and the risks associated with it. But I would say that this is not good for a certain category of investors, etc. Because at the end of the day, what are we trying to do here? We are trying to nudge the companies through our investments to make sure that they behave in a way that enhances overall society. It provides a better governance and also helps overall environment. So to that extent, anybody who wants to leave the planet to the next generation in a better shape should be looking at this fund. Yes, sometimes it may not really lead to outperformance vis-a-vis other categories, but at the end of the day, we also need to do our bit to the society. So I would say that everyone who is looking at creating wealth for oneself should also look at leaving the planet for the next generation in a better situation, and hence some part of our investment should go into ESG category as well.
Okay, all right. Around 5 to 10% exposure they can have. Gaurav, what's your take? Do you have investors coming to you asking for this category, and do you suggest that this could be looked at? And if yes, by what kind of investors?
I would say this should be not definitely for first-time investors, and like also as Harsha pointed out, it should be for investors who are looking at a sort of large cap bias and who want to sort of give back to the society and the environment and follow sustainability practices that is there, because this fund would have a large exposure to financial services, IT, and large cap stocks, and it may not generate the sort of financial returns that have investors have been seeing in mid, small cap, and flexi cap categories.
Okay, all right. Financials definitely could be a bigger chunk of this particular fund as well. Gentlemen, it's a very interesting conversation, but we have to get into a quick commercial break. On the other side, we'll continue our discussion on ESG investments and whether these funds make sense to be in your portfolio or not. Stay tuned for that.
देश भर में आप न
Welcome back. You're still tuned into MF Corner. We have with us Gaurav Gupta and Harsha Upadhyaya. We are trying to understand what the compliance is, what the outlook on ESG funds are, and whether you should invest in one or not. Harsha, mutual funds, they were earlier allowed to launch only one ESG scheme under thematic category. But as per the SEBI Master Circular dated May 19, 2023, it was decided to introduce a separate subcategory for ESG investments under the thematic category of equity schemes. How has that changed things? Has it given more leeway to AMCs to go ahead and introduce more of such funds?
Definitely. As of now, ESG is a separate category in that sense, and there can be a sub-classification in terms of what strategy you adopt to undertake your investments. For example, it could be a completely exclusionary strategy wherein you will exclude certain sectors of the economy based on lower ESG ratings. It could also be best-in-class investing within ESG, which means in each sector there are certain companies which are doing the best in terms of ESG parameters, and you will go and invest in them. There can also be integration strategy, for example, which is a combination of ESG ratings and the financial parameters, and you integrate both of them and see how best you can create a portfolio. So there are several such subcategories which are available today. So to that extent, it expands the scope for mutual funds to go and launch newer strategies under ESG. And we believe over a period of time, you will see more strategies coming into existence.
Okay, and we have seen that in terms of name change as well, which Gaurav was mentioning earlier as well, when it comes to the SBI fund. Gaurav, what are some of the compliances that mutual funds have to follow when they create an ESG fund? There's a lot coming in from SEBI. There's a lot coming in terms of global compliances as well. Are all of that coming in India as well?
As far as I'm aware, there is the BRSR, which is your Business Responsibility and Sustainable Report Framework, which ensures that basically companies are, accountable for, their sustainability practices. And secondly, what I understand is that most of the AMCs and the fund managers have to have, monthly ESG scores. So these monthly ESG scores they get from third-party, service providers. Like you have research agencies like CRISIL and Morningstar, which assign, separate individual rating which is based on a scale of 1 to 100. So 100 being the highest. So say you'll have a TCS maybe at a 70 ESG rating, and you may have a ICICI Bank at a 71 or a 65 rating. Similarly, there are each company on a monthly basis is assigned a separate ESG score, and the mutual funds are supposed to on a monthly basis publish the ESG score of all the stocks that they are holding in their portfolio and the weighted average of all the companies put together.
Okay. Harsha, do we differ a lot from the global practices? How does it work in India? If you can put some light on that.
Many things are quite common, I would say. For example, we need to make disclosures on the voting decision as well as the rationale. Based on which resolution has been supported or voted against based on either environment or social or governance concerns. That's something which globally is also practiced. You also have average score of the portfolio on ESG scores, and how that moves over a period of time is also tracked, which is also something similar that most of the global practices are also there. And apart from that, something which is specific to India would be the independent assurance that is required from a third party that the fund has followed the strategy and has adhered to all the guidelines of the ESG category. This is something that is, I think, over and above what most of the global practices are today. And similarly, there is also a certification that's needed from the board based on internal audit that all the disclosures, all the parameters around the ESG framework are properly followed and the strategy has been properly applied in terms of investing. There are also some other things which are common to global practices, and also there are some newer additions in the context of India.
Okay, all right. Gaurav, let me come to you. This is something that Harsha answered already, but say an investor wants to go ahead and wants to invest in ESG funds. What kind of parameters do they have to look at, and how much should they allocate to such funds as a part of their overall portfolio?
Yeah, so the parameters they can look at, obviously one would be the portfolio of the fund and the historical returns that it has generated. The second parameter that they can look at is that, there are three subcategories now. As Harsha mentioned, the exclusionary strategy, the integration strategy, and the best-in-class strategy. So they have a selection that whether they want to, invest in any of these, categories which is best suited for them. Thirdly, they can also look at the ESG score. Like I mentioned, usually the mutual funds have a third-party rating provider that gives a score to each fund and to each stock. So if they want to invest in companies with a higher score, they can look at that. I would suggest maybe if an investor wants to allocate, he can look at allocating 5 to 10% of his overall portfolio in this ESG category.
Okay, all right. Harsha, quickly if you can tell us, because people use the word impact investing like they used ESG funds. How do these two differ from each other?
Impact funds are a subset of ESG category, I would say. Impact funds are the ones which look for a positive outcome on an environmental issue or a social issue. So there is a identifiable and a measurable outcome that is linked to the investments of the book. That's how it is different. As far as ESG funds are concerned, they work with the overall framework of environment, social, and governance factors, and take all the measure all the risk around ESG factors, and also look at opportunities therein. So I would say impact investing is one specific kind of a ESG fund or a investment route.
Okay, all right, because people use it interchangeably quite often, right? So it's important to have to understand the difference between the two as well. Gaurav, can you recommend some ESG funds for the viewers, and what would the reason be of choosing them?
I would recommend the Quant and the ICICI exclusionary strategy. The main reason, obviously, now if you're investing in ESG, you would also want to look at the financial returns as well and the portfolio. So if we look at the past returns, even though there is not too much of a track record, most of the funds were launched in 2020. So you're not having more than maybe a 4-year track record on most of the funds. So if we see the ICICI fund has delivered a 1 year of around 40 and a 3-year return of 17%. Similarly, the Quant one has delivered a 48% 1-year return and a 3-year CAGR of around 30%. The reason ICICI also, I was analyzing their portfolio, is that besides taking banking and finance, they took some, exposure in some Inox group companies of like Inox Wind and Inox Green, which helped in, generating alpha. And similarly, in Quant, I had mentioned earlier that there is a high churn ratio, but they have somehow managed to, pick very good stocks and, book profits at the right time, which has, reflected in the NAV and the return of the funds.
Okay, all right. So according to you, ICICI Pru ESG exclusionary fund and Quant ESG fund could be good bets here. Gentlemen, thank you so much for joining us today and giving us your view on what ESG funds are like, explaining this to us as well, and whether or not it is a good bet for investors as well. Because as you both pointed out, it's a category which is at a nascent stage and did not see much interest in the last couple of months as well. Thank you so much for joining us today. Okay, all right. With that, let's move on and quickly talk about the returns that these funds have seen since inception. As we pointed out, the inception time has not been a lot, but as Gaurav was pointing out earlier, some of them have done well. The Quant ESG Equity Fund has seen 39% returns. We have seen Invesco seeing 16% returns, Mirae Asset seeing 16% return, Quantum ESG Best in Class seeing 17% returns, and we do have the likes of ICICI Pru, SBI ESG, Kotak ESG, Aditya Birla Sun Life ESG, and Axis as well. They are anywhere between 12 to 19%, with SBI and Aditya Birla being the lowest at around 12.7%. So that's what the picture looks like. Only 9 ESG funds. Let's see whether this category picks up or not. With that, we'll take your leave on this edition of MF Corner, but stay tuned for Closing Bell to take you through the last hour of trade.
Co-powered by